Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2024, and we're diving into the third quarter earnings report of Ocular Therapeutix, a biopharmaceutical company focused on innovative therapies for retinal diseases. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ocular Therapeutix has been making significant strides in their clinical trials and financial performance, so there's a lot to unpack today.
Revenue and profitability overview. Let's start with the financials. Ocular Therapeutix reported a net revenue of $15.4 million for the third quarter of 2024, marking a 2.3% increase from the same period last year. However, the company posted a net loss of $36.5 million. John, can you break down these numbers for us?
Certainly. The revenue growth is primarily driven by increased sales of their product Dextenza, despite higher gross-to-net provisions. The net loss, on the other hand, reflects significant investments in their clinical trials, particularly the SOUL 1 and SOUL R studies. It's worth noting that their adjusted EPS of 22 cents slightly beat the forecast of that at 23 cents, which is a positive sign for investors.
Clinical trials and strategic initiatives. Ocular Therapeutix has been making headlines with their clinical trials. Can you tell us more about the progress in their SOUL 1 and SOUL R studies?
Absolutely. The SOUL 1 trial is on track to complete randomization by the end of 2024, which is ahead of schedule. This trial is crucial for their AXPAXLI product, aimed at treating wet AMD. Meanwhile, the SOUL R trial has opened for direct enrollment, which should streamline the process and enhance data collection. Financially, Ocular is in a strong position with a cash balance of $427.2 million, expected to fund operations into 2028.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Ocular's R&D expenses have increased significantly. How does this impact their future outlook?
The increase in R&D expenses to $37.1 million is primarily due to the ongoing clinical trials. This is a strategic investment as they aim to bring AXPAXLI to market. General and administrative expenses also rose, reflecting higher professional fees and personnel costs. CEO Pravin Dugel emphasized the company's strong execution and anticipates 2025 to be a milestone year, which aligns with their strategic goals.
Key takeaways. In summary, Ocular Therapeutix has shown resilience with a slight revenue increase and a better-than-expected EPS. Their clinical trials are progressing well, and they have a solid cash position. John, any final thoughts on their investment prospects?
Ocular Therapeutix is well-positioned for future growth, especially with their promising pipeline and strategic focus on retinal diseases. Investors should keep an eye on their clinical trial outcomes and financial management. It's an exciting time for the company.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ocular Therapeutix's performance in the comments below.